This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
Okay, so now I'm going to do the monthly market update.
Yeah.
This is the monthly market update for January 2025. I want to remind you about a couple things. Number one, when we do the January update, the data is coming really from last month, from December. And this is about single-family homes. I talk about single-family homes because that's predominantly where I work. Not that I don't do condominiums and high-rises, but mostly we do single-family homes. So let's talk about the data we found for this month. Okay, currently available 5,553 homes. That's down a little bit from last month.
5353.
5353. Did I say something else?
Yeah, you said 55.
Oh, sorry. 5353, down from 5822. Currently under contract, pending or contingent is 1758, 1,750. That's down about 300 from last month. Sold in the last 30 days, 1633, about the same as
very
last
steady.
month. Months of inventory, 3.28, where you were 345 last month. Not a big change. Days on the market went down significantly, 32 from 38. And our median sales price this month came in at 473. That's down from 480 last month. Last year, we had fewer homes available, just a little over 4,000, about the same number in escrow, a little fewer sold, about 3 months of inventory available.
I mean, that's 20% less transactions in the previous year. So that would have been, what, call it December of 23?
Right, 20% more transactions this year than last year.
Or 20% less.
Yeah, so they had 20% less last year. 40 days on the market last year also, and the median price was 449. So a year over year, 449 to 473, an increase. We think it's roughly 8% is what it worked out to year over year. And and we might want to talk about that a little bit.
National number came in at 4.5% nationwide for the year. So that idea of let me wait for prices to go down to buy continues to be a bad idea.
Big mistake.
Yeah. And the sooner you get into real estate, the better off you are.
Yep. Let's talk about the volume. And this shows the volume, number of homes sold per month, year over year, going back to the year 2000. And this year we were just slightly ahead of last year. The RJ wrote an article saying it's good news. You know, we're back.
So
certainly for our industry, that little a little bit more.
One thing to point out on this too is that I think people don't realize, and maybe they feel it. We're in the industry, so we see it every day.
Yeah.
Last year wasn't really a good year. Like if you look at this chart and that's number 6.
It matches the volume from 1995.
Right. This is number 6.
2002.
Worst year in the last 25 years.
Yeah. You can see. Looking at the last few years, you can see it's towards the bottom.
Yeah,
it's just
that's
a little
for
better
Vegas
than last year.
Specifically, nationwide, we're matching 1995
Is that what it is?
unit levels.
Okay, interesting. Let's see what else we got here. This is the median price from December 22 to currently. You go back to December 22, it's 425. We're at 475 right now, according to this chart. I have to point out to people this line is pretty flat. It's not, it's not real wavy. It's a steady up. It's a comfortable up, I would say.
So like 5% a year.
Up 50,000 from roughly 2 years ago, I guess. So
December of 22, yeah.
So up, about 11%, something like that. Okay, from then, that's not that big a number from
2 years ago.
From 2 years ago,
When you annualize that, it's going to be like
5.5%. Yeah. So that's okay. This is luxury sales. Now I have 2 luxury sale charts because what happened is they've come to the realization. I think they've listened to the show because I think
they did too.
I'm complaining.
There are people that do that.
They listen to the show. I've been complaining about this $1 million figure. I was saying that's
too
not
low
necessarily luxury anymore. You can see the volume. It was the best year ever for homes $1 million or more. But then some of the regular tract homes are falling into these numbers, and so it really is not correct. So now what they've done is they've said, okay, let's look at 3 million and over. Now this is a little more accurate, I think, in terms of what we would qualify as luxury here in Las Vegas.
Still a pretty good year.
Yeah.
And it was still very much the best year ever for homes over $3 million. When you go back, look at 2014, I don't think a single month was double digits. It was all single digit months. You go back to 2014.
Somewhere in the high 20s for the total year.
Yeah. 10 years ago they didn't have 25 for the year probably. Maybe 25. And then it just really shot up in 2021 from the pandemic is when that happened. And then we've seen it slipped the last couple of years, but it went boom, just boomed this year. So I think cash is coming back off the sidelines again.
For sure. And also
we're
more,
seeing that.
there's more $3 million homes as well.
Yeah, there are.
Way more. Yeah.
There are more. And I think that and a lot of these sales, when you get into this price range, a lot of these purchases are cash.
Right.
Because financing for this is a little bit different. And sometimes people at this price point don't want to bother with financing.
People access money differently when they're high wealth.
This is stock market driven.
Indeed.
This purchase, the 3 million and above is stock market driven. The stock market's had a good run over the last couple of years.
Yep. So let's take a look. This is how people have been buying homes. This is the type of financing or not that they're using. And 45% of our transactions were conventional financing.
Right.
19% FHA, 8% VA, which is a nice number for VA.
Yeah,
that's
pretty
getting
good.
up there. Cash was 26%. And then you have these others, 1031 and other things, maybe just people, not necessarily arm's length transactions or whatever.
26% of all sales across all price points.
Yeah, this is everything. This is not just single family homes. This is everything. So that's 26% were cash, and a lot of that. See, I wonder if that's dollars or units by sold terms. Anyway, because if it's units, it doesn't make sense. If it's volume, then yes, it makes sense. Because remember, those high points are more cash than not, and that's what eats a lot of that up a bit.
I'll say this on our day-to-day transactions, about 25% of the deals we close, so transactions, not volume, are cash.
Okay, there you go.
So we have a lot of cash transactions that come through our office.
That helps. Okay, let's take a look at this. Let's just go to the next one here. This was interesting when I see this chart. This shows you the number of homes sold versus the available inventory. And look what's happening at the end. It's kind of matching up right now. We didn't have a lot of homes come to market. We saw the inventory come down a little bit. The number of solds remain steady. So what you're seeing is that the inventory, like every year, look at this pattern going back to 2013. There's patterns. We talk about seasonality in real estate, guys. This is it. This is the pattern. Now it got wonky during the pandemic, right? But every other year is pretty consistent, and we're back to that pattern again. You're back to seeing that normal pattern of available properties versus sold properties, although lower volume numbers still subsequent to that.
Again, one of the lowest volume numbers that we've seen.
Yep.
For sure.
Okay, now here's my chart, the one I like to do every month. And this is those three simple lines, the number of homes sold, number of available homes, and the median price. So homes sold right there. It's down to the lowest number since last year at this time. The available homes crept up, but it kind of came down a little bit the last couple of months. It's crept down a little bit. And then the median sale price, there's that flat line, guys. It's, a year ago it was $450, now we're at $473, according to my data that I just pulled recently. So kind of a flat line. So that's your monthly market update. Comments, John? What do you think?
I want to throw one thing in there because I've had a couple of people during my interview process with them on qualifications bring up the point that they're seeing inventory rise, like inventory is growing, and will that mean prices softening, in this sort of conversation that they're having with themselves. And so just kind of dealing with headlines, the year over year numbers for the nation reported that inventory was up 12%. From last year to this year, there's 12% more homes available.
Okay.
And if that were to continue, then could you see prices soften and this sort of thing? But it's leaving out, I think, some broader perspective, which is the one big number I'd give people is pre-craziness, go back to pre-COVID, we are down 21% from the available inventory that we had at the end of 2018. So 20% less than, say, a normal world or the pre-COVID world at all. And during that same time, our population has increased by 12 million since 2018.
Dramatic housing shortage.
So more people, less houses available than normal. That continues to be the story, and it's why you're not seeing significant price falling or that price pressure coming out of the marketplace.
I think it's important to understand that really pricing is related to the very basics of economics, as we said before the break, supply and demand.
Yeah.
The way we're going to soften housing prices is to get more houses.